I don't have a hook today, but we're talking about platinum, so let's get into it. Hey, my name is Tucker Krause, and welcome back to my channel, and today's video we're going to be talking about Impala Platinum. They trade with the ticker IMPUY on over-the-counter exchanges, and they're also on a whole bunch of different European and African exchanges, and everything you need to know about their current share price and all that good stuff is on screen now, at least as of time of filming. And the interesting part here, as you can see, is their low PE and quite high dividend. Now, of course, you should always be wary of natural resource stocks with a low PE ratio, but with the massive decline in platinum miners recently, it's hard to not want to take a look. Though I should also note that all of the data in this video is going to be as of July 20th, 2023, and all currency listed is going to be in US dollars. Though on maybe some of their presentation snippets, it'll be listed as some other currency. If so, I'm sure you can read that. Okay, so now on to some technical analysis. On this 5-year chart here, we can see that they have declined over 50% since their peak in early 2021. Similar to Palladium pricing. Interestingly, the stock trades seasonally. It seems to peak in the first half of every year and decline through the rest of the year. But on to other things. We can see here that there is absolutely a death cross here as the 50-week crossed below the 200-week, and so as we can see, we continue to move down, following that, continuing that bearish action. Though luckily for the stock, it did just bounce off some long-term support, as you can see on the bottom here. So I think its next challenge is going to be, is it going to be able to break through that old support line at about $9, or is it going to fall through this very old support line? Only time can tell. By the way, if you've enjoyed the video so far, please make sure to hit that subscribe button. At time of filming, we're just 3 subscribers away from 1,000 subscribers, and considering only 17% of you guys are subscribed, if the rest of you go hit that subscribe button, it'd be greatly appreciated. Now, on with the video. Okay, now time to just look at a couple slides from their presentation. So this first slide here, we can just see that everything has been going the wrong way the past 2 years. Their free cash flow, falling. Their production, falling. Their costs rising, CapEx rising. Though to be fair, CapEx rising isn't always bad, especially as you can see here, a lot of it is to do with growth. Though either way, it doesn't excuse all the other bad numbers here. To go a little bit more in depth on their rising costs, to absolutely nobody's surprise, it is largely due to inflation, though there are other factors such as lower grade affecting it. On this side, we can see that despite their declining free cash flow, they are still holding a very strong cash position, even with those massive amounts of dividends being paid out. So with that, we shouldn't be too worried about the company going down anytime soon. And on this slide, we can see why their stock prices declined so much. All the products they sell are declining so much in price. Though, if you're interested, you can pause right here and read through their thoughts on where the prices for these metals are going to go in the future. So, how is the company itself doing? Well, its return on invested capital is 23.91%, which is well above the weighted average cost of capital of 12.34%. Its return on equity of about 25% is also very strong, since that's well above the S&P 500 average of 14%. Their interest expense ratio is 155.4, considering this should be over 1.5. This is insanely good, and their debt ratio is 0, since they have no debt. But now you might be wondering, wait, if they have no debt, where's their interest expense ratio coming from? Well, judging by their balance sheets on Yahoo Finance, probably due to some capital lease obligations, something like that, but not like full-on proper loans, debts, that kind of thing. So, onto their balance sheet, we can see here that their quick ratio is 1.833, and their current ratio is 3.49, and their debt ratio, having 0 debt, is obviously 0. Since the first two should be above 1 and the debt ratio below 0.5, these are obviously quite strong. So, even if Impala's costs continue to climb and the product they sell continues to decline in price, they still do have a very strong ship to keep them afloat. So the question here is this ship with all of its power going to be able to rise once again, or is it bunkering down to weather the incoming storm? Only time can tell. Alright, so what you've all been waiting for, the DCF results, they're all going to be popping up on screen now, and so feel free to read through them, pause, and then I'll give you my thoughts in just a second. So obviously the results do look quite good here, though you have to remember a DCF is an estimate based off of past results. And over the last 10 years, yeah, the company's consistently made more, so I'm obviously going to project that's going to continue to be the case. But the issue is that Palladium has been in a massive upcycle for the past 10 years and seems to be just coming off of that. So if that upcycle is over, chances are Their increases in cash flow are also over. But on the other hand, their namesake, Platinum, has also been in a down cycle for the past 10 years. Will Platinum flipping into an upcycle be able to counterbalance Palladium going into a down cycle? Who knows? It's obviously just really tough to say here. Though, of course, that's why you should absolutely be researching all of these stocks yourself, since this is not financial advice. Do your own research. Thanks for watching, and I will see you next time.